Hello, everyone, and welcome to the weekend update here. It is Sunday, July 2nd, and we've had, again, as we know, a very nice run from the start. I kept saying we're going to hit a little bit of a time when things aren't going to be quite so smooth, and that is kind of where we're at right now. We did have a couple trades that, when this market blasted up the way it did, it created a couple smaller losses for us. And that is the key. One of the biggest things about trading is knowing when to when to press, when to trade more larger size, when to trade smaller size. Right now, with lower volatility and a market that seems to want to run, define odds in many people's opinions, we just stay smaller. So, looking at our current open positions, again, we are smaller with our current open positions. So we've got our rut position, which has been on for a while. That is down slightly, but it's kind of in this tent, so it's in a good place. And again, expiration is still 6 weeks away on this. These two trades are up slightly. We added a calendar onto this one the other day, and we were able to get decent pricing on that calendar. And I think that is in pretty good shape right now. Let me refresh here because we also have the QQQ trade where the P&L diagram looked a little wonky. Yeah, it's not quite that steep over here. Let me open that up, and it will likely, yeah, there we go. So, we're up $139 in this one. It's in a great position. Um, we keep thinning out the butterflies on the outside edge of this, and then we actually rolled the long call in at 1.2 to make sure that this line here doesn't start falling into the valley of death. So that's kind of been the game plan on that one. And then this is a very similar position that we just put on SPY a couple days ago. So looking for essentially the same thing here. Now these are being done in SPY and QQQ as opposed to SPX, mainly in order to get the balance that we need to get in these. In other words, if in personal ones that I trade, I will have this on an SPX and I might have 10 butterflies and then one long call. But of course, 10 butterflies is quite a bit more risk associated with the trade compared to what I'm trying to do that I share out with students. I'm trying to keep that risk, under the 2,500 per trade range, and even a little smaller now, given our current market environment. So the purpose here is for you to trade these in paper in a larger size if you want, or if you want to trade them in these, the SPY, the QQQ, just keep the size smaller. But that's the goal here, is to kind of learn how these move and how these act. So if we take a look, let's see, in community here, there's a couple of these that will end up now moving because they have closed. And I'll clean this up, but this one closed. And then we had another one here that expired. This one expired. So we'll move both of those down into the archived area. And I think everyone knows that you have the archived area here as well, where you can go back and you can replay and learn from all of these old trades also. So don't forget that you have that tool there available to you also. And then let's take a look at our market here at the chart of the SPX. So again, this thing has had a very driven up move. It came up into a resistance area around 4,200 where we were expecting some resistance and some chop. And then it popped through that. And it seemed like the next area of resistance might be this 4,300 range. Well, it did kind of stall there a day. That was it. And then it kind of blew through that. So our next area of logical resistance is going to be up here at around the 4,500 range, 4,550. A case could be made that we're at resistance right now. We did not break the high of a couple days ago here, and we do have some consolidation right in this range. Our volume, while we were up considerably, our volume, if we look down here, didn't necessarily support the up move. So oftentimes what happens in these situations, and this may be what's happening here, is that, it's a Friday going into a holiday weekend. A lot of your professionals are not there on those days, and Monday is probably going to be similar. So what happens is you get a lot of retail buying come in. So, and there's no one to offset that retail buying. So you get a large number of people that are buying, 100 shares here, 100 shares there, not institutions that are buying hundreds of thousands of shares. That's why the volume is lower. And many times it's also the retailers that tend to chase the market. They see, oh my gosh, this market's hot, it's going up, I've got to get in too. And so they get in, they start buying, but again, they're not buying in nearly the amount of size that the large institutions are. And oftentimes, the large institutions, many times referred to as the smart money, will sell in to those retail buyers. And if they're on vacation, if they're not here to sell into them, that's another reason sometimes that you get this sort of a run up or a rally on lower volume. So anyhow, I'm a little bit stumped by the strength in this market right now. I mean, this seemed very logical coming up to here, even to here. This seems certainly a bit excessive, maybe. But that's, I don't control the market. Obviously, we're here along for the ride. So we're going to, again, continue to keep our positions a little bit smaller. We're also going to continue to trade trades that aren't going to be run over by a bullish trend. At the same time, we have to be a little bit cognizant of when we get this pullback, it could be a rather aggressive and fiercer pullback down here to, the 4,100, 4,000 range, which would be about a 10% drop. If it were to happen, I'm not predicting that, but we need to have our model set up to possibly incorporate that. And that would actually be, in my opinion, that would be ideal. That happens while we're trading light right now, gets the volatility back up, gets back down to a level of support. At that point, we should get really good prices on butterflies again and be able to get back to a higher percent return in those flies, or at least a better reward to risk ratio. Right now, the reward to risk ratio on like a broken wing fly, they're just not that good. So that's the type of thing we're going to be looking at here going into this next week is, hopefully maybe getting some sort of a pullback, maybe a little uptick in volatility. And at that point, we can resize a little bit. Short of that happening, we're going to be focusing on, putting on trades like the flat fly with a long call associated with it. Those types of trades are a little more conducive to a big run up market, because if the market does continue and power higher, that long call will gain in value and it will support the structure to the right of our tent for a period of time. Again, as decay kicks in, we need to make some adjustments on that, but it's a good place to start. So anyhow, that is it for our wrap up here on July 2nd. And tomorrow, Monday, I'm not expecting to really be doing much. I don't think you're going to get any real moves in the market. So, I mean, we could get, again, a little bit of this continued rally from retail buyers buying and no institutions selling into them. But I'm more than anything, I'm probably predicting that tomorrow's just going to be kind of a chop sideways sort of day, maybe a little bit of a drift down after this huge run up that we had on Friday. I think there might be a little selling that will come in, but overall, probably not much. And I'm not planning much at this point either. So, don't necessarily expect to see anything tomorrow unless we get some sort of a big move. So that's it for today. Take care.